The Asian financial crisis began with a single moment, the collapse of Thailand's currency, the baht sending shockwaves across the world. Thailand had borrowed billions from foreign investors, believing its booming economy would never slow down. But in 1997, investors began pulling their money out, fearing Thailand could not repay its growing debt. The Thai government tried desperately to defend the baht, spending billions of dollars to keep it alive. But the pressure was too great, and on July 2nd, 1997, Thailand finally let the baht float freely. The baht collapsed instantly, losing half its value in a matter of days. Factories shut down, banks froze loans, and thousands of workers were fired overnight. Panic spread faster than the collapse itself, as people rushed to exchange baht before it became worthless. What happened in Thailand was only the beginning, a spark that would ignite an economic wildfire across all of Asia. The collapse of Thailand's baht unleashed a chain reaction, pulling one Asian economy after another into financial chaos. Investors panicked and withdrew billions from Asia, fearing every country would suffer Thailand's fate. Malaysia was hit next, as its currency, the ringgit, began collapsing despite government attempts to stop it. The Philippines felt the shockwaves too, as foreign debt strangled its economy and interest rates skyrocketed overnight. Then the crisis plunged into Indonesia, where the rupiah collapsed so fast that prices changed several times a day. Indonesia's economy fell apart, triggering riots, looting, and a complete breakdown of public order. South Korea was next, shocked by sudden capital flight that drained its financial reserves within weeks. Banks across Asia began collapsing one after another, shutting down without warning and freezing millions of accounts. From Thailand to Korea, currencies lost value overnight, wiping out savings and destroying decades of progress. A crisis that began in one small nation had now engulfed an entire region, and the worst was yet to come. No country suffered more brutally from the Asian financial crisis than Indonesia, where economic collapse ignited riots, hunger, and national chaos. Indonesia's currency, the rupiah, collapsed faster than any in Asia, losing more than 80% of its value within months. Prices exploded so violently that basic food became unaffordable for millions of families. Bread, rice, and cooking oil vanished from shelves as store owners refused to sell goods that would be worth less tomorrow. Starvation spread, forcing families to skip meals and rely on emergency aid that could never arrive fast enough. As desperation grew, riots exploded across Jakarta, turning streets into battlegrounds. Shops were looted, buildings were burned, and entire neighborhoods were engulfed in flames. The government tried to restore order, but the collapse of the currency had already destroyed its authority. Thousands fled the cities, carrying whatever little food and money they had left. The crisis reached its breaking point when the Indonesian president was forced to resign after 32 years in power. Indonesia stood on the edge of collapse, a nation burning under the weight of a currency that had lost all meaning. As the crisis spread, South Korea, one of Asia's fastest-growing economies, was suddenly pushed to the edge of national bankruptcy. South Korea's rapid industrial boom hid massive corporate debt that was impossible to repay once the crisis hit. Foreign investors pulled their money out at lightning speed, draining the country's financial reserves. The Korean won plunged so fast that companies could no longer afford to buy raw materials or pay employees. Major corporations collapsed one after another, triggering mass unemployment across the nation. Banks froze lending, leaving businesses unable to function and families unable to pay their bills. For the first time in its history, South Korea was forced to turn to the IMF for a massive emergency bailout. The IMF bailout came with strict conditions, tax increases, wage cuts, and brutal restructuring that millions would feel. In a moment of national humiliation, South Koreans donated their personal gold to help the country survive. With sacrifice and strict recovery measures, South Korea slowly began to confront the crisis. But the scars would last for years. As currencies crumbled and debts exploded, banks across Asia began to fall like dominoes, dragging millions of lives down with them. When currencies collapsed, banks holding foreign debt were instantly pushed into bankruptcy. Millions rushed to withdraw their savings, only to discover their banks had no money left. Small businesses collapsed when banks stopped lending, turning vibrant streets into rows of shuttered shops. Corruption scandals erupted as the crisis exposed years of hidden loans, false accounting, and political favoritism. In Indonesia, over 50 banks failed in just a few months, triggering mass unemployment and nationwide panic. South Korea faced its own wave of corporate failures as chaebols collapsed under impossible debt loads. Families with mortgages lost their homes, and many were forced to move into smaller housing or relocate entirely. The banking collapse turned the crisis from a financial shock into a full-blown human disaster. The Asian financial crisis wasn't just an accident. It was a disaster fueled by greed, speculation, corruption, and global power struggles. Global hedge funds made billions as Asian governments drained their reserves trying to defend their currencies. At the same time, years of corruption and risky borrowing left many Asian corporations dangerously fragile. Banks lent money carelessly, believing economic growth would never stop and risks didn't matter. Governments kept currencies artificially high, hiding the real weaknesses of their economies. The IMF stepped in, demanding harsh austerity measures that often made the crisis worse before it got better. Ordinary citizens paid the price while the wealthy and politically connected escaped the worst of the damage. Blame was passed around the world, but one truth remained. The crisis was the result of a system built on unstable foundations. When greed, corruption, and fear collide, the collapse of money becomes inevitable. The Asian financial crisis may belong to the past, but its warnings echo loudly in the world we live in today. The crisis proved that even fast-growing economies can collapse overnight if they rely too heavily on foreign debt. It showed how investor panic can spread across borders, turning local problems into global disasters. It showed how investor panic can spread across borders, turning local problems into global disasters. It warned that banks must be strong enough to withstand shocks, or millions will suffer when they fail. It taught that currency stability is fragile, and once trust is lost, recovery becomes incredibly painful. The crisis also revealed the power of global institutions, whose decisions can reshape the destiny of entire nations. The crisis also revealed the power of global institutions, whose decisions can reshape the destiny of entire nations. Most importantly, the crisis reminded the world that money can disappear far faster than it can be earned. This is Dark Economics, where we study the collapse of yesterday to understand the dangers of tomorrow. If you want to learn the hidden stories behind money, power, and crisis, subscribe and join the journey.